All right, wanting to record the sequence for January 21st. I'm just going to be going over the day as I see it using some market profile principles. There's a trade that I took a morning long that I locked in at a really good price. Unfortunately, that trade and just sort of having a big head about locking in at what was the high of day at the time uh, caused me to miss a failed breakout trade that I freaking had in my my scenarios, my hypos, and I missed that, and that would have been a full size trade and would have been like 3 times as big as my first trade. So anyway, again, January 21st, going over some of the things that I see here for today. Well, we'll start on the market profile. So this line right here is on the weekly. I'll show you that in just a moment. But this is a line you can clearly see here on the profiles that it's been respecting. So we have overnight longs or overnight traders are uh, pretty balanced. So really nobody's going to be off sides in a big way if we move up or down. Down more, but I mean, it's a mixed bag, not something we can really lean on for today. Some of the other things that I'm noticing are, and actually, just to go back to that trend line, this is something that I've been noticing is very valid. If there's an obvious trend on the weekly, we'll just show it to you here. Drag this down. Obvious trend on the weekly, then it's a higher time frame. This is where these trend lines are going to be more valid. Uh, I'm actually going to be incorporating a 4 hour. This is hourly. I'll be incorporating a 4 hour on a monthly chart, and then start to incorporate that in my trading. Just because, these big levels. This is where primarily the big money plays, and so once you're approaching something like the yearly open, I mean, that's a level that a lot of these big funds are going to have on their screens. So it'd be nice to know, are we pushing away with, those people on our side, that just added confluence to trades. Anyway, so that's something I've been wanting to do, is add that or lean on that more into my prep and my trading. So going into the profile, first thing I noticed with the overnight is that even though we're not really going to be using this for having traders off sides in a significant way, enough to factor into a trade, the thing that I did notice was when we broke this trend in the overnight, we attempted to fall. I mean, we did, but we found support right here and we rallied back pretty aggressively. So leaning on overnight structure is something I'm going to be doing more as well, just because I've seen it play out too many times. I've noticed it, noted it, later on, gone back to find out if it was valid in my back testing as well. So I'm going to be leaning on that. And this structure right here tells me it's unlikely we're going to be going down uh, on the day, just because we tried and failed. We were opening inside balance. We ended up opening right here. I am kind of mad at myself for the trade that I did take was smaller size, but I should have been treating both of these as two different distributions. The fact that it's within yesterday's range is important, but just because you have the two different distributions there, you gotta treat them separately, and then just note it's inside of prior day balance. You don't put much weight on that in this case. I did, which is why I traded the smaller size. Again, that was a mistake on my end. Um, we are starting to see references stack above us. So we've got yesterday's point of control, this point of control, this point of control, this one all-time high, which is poor. And one of the interesting things that I heard Peter say today was that once you have 5+, he said 5 to 6 or even more references stacking, say above you or below you. In this case, we've got the 1, 2, 3, 4. I mean 4. So not getting we're at 4, right? It's something to note. But if we start adding 5, 6, 7, 8, more point of controls, more poor highs, that's where it's like, okay, we're the market is likely going to mean revert here. Maybe in a big way, maybe not, but you just start to notice that. Last things on the market profile. Actually, nothing else with the market profile, just pretty simple. We're opening up in between these two. This is actually going to be a good spot for the early trade. So we do need to lean more on our execution chart for that trade because the market profile itself is not going to be developed enough to use. So I'm going to hit play here, and we're going to go through, and I'll just give you some comments on what I'm seeing. So right at the open, I'm going to make this a little bit bigger. There we go. I've got this volume set to red is below 100% relative to the last 30 days. And actually right here, let me pause real quick. So this is what I'm saying. We've got a choppy open. That is where we attempt down, we cross back over to the open. If we continue to do that for like 20 minutes, that's one thing. In this case, what happened was, where's the open? 809, 18, right here. So you can see it's not so much that we went up, went down, went up, went down. We went down to test the VWAP right here and then pushed back up. So that is different than just chopping around 4 or 5 times. We went down and we had a rejection up. That's after I had sort of the thesis that we weren't going lower because of the structure that we saw in the overnight right here. We tried to go lower, we failed. And we came back in an aggressive way, right? And that was paired with a lot of volume right here and a lot of delta in the overnight session. I have a sneaky suspicion that's probably some big money at play that was going to defend their position around VWAP as well, and they're just wanting to push that up. Dalton talks about that in his videos a couple times of just sometimes the manipulation will be obvious. That's sort of what I'm seeing right here, just with this crazy high volume at 8:03 in the morning. Where's that coming from? So anyway, the couple things, I did miss this trade. I took the long later on. But right here, this is a good trade to take because, again, you have this big push as we went through Delta, right? Or as we went through a VWAP. And then we bounced off right here almost to the tick. This is crazy. Almost to the tick. And then you just had confirmation that we continued to have high relative volume. We had 112 RVol in the day. That's good enough to take a trade and be confident in it. We just broke into this distribution. So top of single prints, look at this. High volume, high delta, right? That's what you want to see. I should have taken the trade right here with that being the trade idea. So we'll keep going. I'm going to speed it up. I believe this is where I got in. That's prior day low. What was that? Or point of control. Point of control, prior day low from 2 days ago. So that is going to be an important level. I believe I got in. Got it right as that started to turn. I got in. So I think I was like 82 and change or something. So the reason behind this trade was, you can't use a whole lot from the market profile again because it's not super mature yet. But what you can take from that again was really going to harp on the overnight structure, and then also the open. We came back to the VWAP right here, so you sort of need to know. You can't just base it on this because you didn't know VWAP was right here. But it is important to know based on the price structure that price came down and then rejected versus just chopped. So we know that it's a fairly confident open. And then we've got B period coming down to less than 50% halfback of an A. So that's very bullish. And we're passing through this level right here with the prior day point of control with high volume, high delta. There's no reason for me to think that we're not going to make it to the prior day high because that is the next logical level. And we've got a lot of bullishness signs from market profile, delta, and volume already. So let's just ride the trend. Also, this is that diagonal line on the weekly. So we broke above that, and now we're traversing higher. And that was a significant trend line. So let's keep going. What volume and delta does during the trade is important, but not as important as what it looks like when you approach a level or passing through a level. All right. And I believe I did. I locked in everything at prior day high, and here's the reason. At this point, we were 140% of the initial balance range. What that means is the initial balance, the right here. So A period low to B period high, that's the first hour of the day. That range was 140% of normal relative to the last 30 days. And one of the things that I take away from using the imbalance range or initial balance range is if it's ever big like this, you have greater odds that price is going to start to chop around or even like mean revert later in the day, just because this push took a lot of energy. A lot of it. Do we really think we're going to continue and have another? What is that? How many points is this so far? 44. That's a. It's like a 65-point gap. Maybe I'm terrible at math, but it's up there. A 65-point run. Do we really think it's going to go another 65 points? So that's just the feel for the initial balance range. When it's 140%, how much more could it possibly go? That, and then also if I put these back together, you see we have 2 distributions already. And if we start to make a third distribution up here, having 3 distributions in a day is very, very rare. So I'm just stacking those 2 data points on each other in terms of trying to have the best odds of locking in gains when I have them. Just because I know, again, with the initial balance range and the 2 distributions already, I just have very low odds that it's going to continue. So that's why I locked those in. So I'm going to fast forward a little quicker because this is the trade that I missed. I even had this in my hypotheticals. All right, so at this point, oh, and by the way, my advanced decline was positive the entire day. So this is what it will look like, or not the entire day, but you know what I mean. In the trade, this is exactly what you want to see. You've got the weighted is the bar, and then the unweighted is the histogram. Essentially what you can take away from this. I was going to make a different video to maybe describe this, but it's fine. Let me get out of this. I hate Thinkorswim. Get out of there. So anyway, with the weighted, what that basically means is it is giving more weight to the bigger stocks inside of the ETF or whatever it's measuring. I can't remember. It's a study that I bought. And the reason that's important is because it's proportionate. It is the top, whatever, 8 or the Magnificent 7 or whatever it is. They make up more than 50% of the S&P or some even higher. You need to give them more weight in terms of measuring, what their stock is doing that day versus Johnson & Johnson or some other smaller stock in the S&P, right? The unweighted is just that. It doesn't weight them out. It is giving equal weight to every single stock in the S&P 500. So when you have when you're measuring these against each other, essentially when the weighted is much higher, that means the trend is more healthy. It's more healthy because that's what you want to see. It needs to be higher than the unweighted, because the unweighted, again, is all of the smaller stocks that, I don't know, maybe I'll record that video later on. I don't think I'm explaining it correctly, but essentially this is just a healthier trend versus if you have unweighted that's much higher than the bars. That just kind of signals that that's a trend that's not likely to continue. So anyway, sorry, I got long in the tooth there. The trade that I missed. So we are still bullish on the day. Going at quick speed. So right here, this is prior day high. I mean, what was I thinking? I could have taken a aggressive short right here, but it's pretty clear when we came up to the prior day high, we've got a lot of volume here, a lot of delta, a lot of volume, but we didn't have follow through. We pushed through it with high volume, high delta. That's a good sign, but we didn't have any follow through. And then we just sort of started to see declining volume, declining delta. And then right here, that's 190% of the last 30 days in that time frame with high negative delta. So that's, you could take a short at that point, but let's play and I'll walk you through what that looks like. Here we go. So right here, you've got D period was inside of C period. That shows short-term balance. Usually in these cases, the first break is the direction that you take in the trade. So if this broke D period high, that meant sellers didn't show up. Just go ahead and take the long. This break below, the narrative that you have with that is we have a failed breakout. So you just sort of assume that we're likely to traverse the value area, right? So the thought process here is like price is going to go up, down, or sideways. There's no fourth direction. We just sort of eliminated going up right here because we had a chance. We had a chance and we backed off from that level, and then we started to see some aggressive selling, and then we broke one time framing in D period. So we had the chance, we failed. So if I can remove going up, now we just have sideways or down. And in that case, now you have a 50-50 shot of being right. And if I had taken the short right here, everybody knows what happens. It just tanks. I'll speed up real quick so we can see. Yeah, I mean, that sucks. That really sucks. We had a rally in the afternoon that was on news, but that was more random than anything. But this would have been a full-size friggin' trade, and we went, I'm not going to do the math because it's just going to piss me off. And then also you had the confluence of 6,900 right here. This significant level. We paused around it before. I remember because I was sweating, figuring out if I should take my trade or lock in my gains or not. But that's a significant level that we just blew right past, right? So that's all bearish signs. And then your trigger is when E period breaks D period low and just continues. So don't miss that trade again.